Because it was a remarkable year in so many ways in terms of how much money was raised. But then there is this issue of performance and what it says about really where the market is today and maybe where it's going.
Yeah, I think if you look back to how we exited 2020, we had markets trading at historic levels. We had a huge pipeline of companies ready to go public. And now we opened the floodgates to a massive 2021. Clearly now valuations are being tested. I think there's a bit more discipline in the market, but we still have a lot of cash on the sidelines that wants to go to work. And I think we've set up 2022. We still have a pretty robust January, February calendar. Probably not quite as strong as last year, because last year was historic, or this year was historic. So we'll see how these perform as we get out of the gates in 22.
Do you think there's a shift in the psyche, though, of the investor class as you spend time with them and think about the kinds of companies that can work in the public markets? There was a moment, if you recall, a couple of years ago when Uber went public, for example. Lots of energy around that offering back then, and Lyft as well. Yeah. But there was a switch, if you will, in terms of how all of a sudden the investor class said, you know what, actually, we care about profits. We care about the timeline to getting to profitability. And you really saw what the impact was on pricing and what kinds of companies could go public at that point.
Yeah, I think that's a great point. And clearly, we all know investor sentiment changes very, very quickly. So right now, we are seeing more questions that companies get on roadshows about what is the path to profitability. I think a shift from saying we'll pay anything for growth to being what is the long-term outlook is becoming, more questions from investors on that area. So I think we're going to see more of that. And it is something that companies have to deal with. At the same time, there is so much private capital. So we go through these areas where there could be a valuation disconnect to what investors are willing to pay, what companies are willing to accept. And companies, certainly all the high-quality private companies, have ample access to saying, we're going to take more private capital and wait out the market. So we could be in one of those moments. But again, we still have a pretty healthy January and February calendar lined up right now.
Huge component of the business in 2021 was the addition of SPACs. Sure. And we are now in a moment where Gary Gensler says that he is going, of course, runs the SEC, is going to regulate SPACs perhaps in a way that they have not been thus far. How do you think that changes the dynamic long term?
Yeah, well, regulation SPACs will obviously play a huge role. We saw that play out this year. So we had an incredible first quarter of SPACs, historic number of SPACs listed, well over 200. And then the SEC did make some accounting changes. It really did slow the market for a good 3 or 4 months. We have seen an uptick now as the offering has changed some, where there's a little higher yield for the investors as well as shortening of durations. So I think as the SEC looks at this, 2022 is a real big year. There's over 450 SPACs that need to find combinations by year end. So as we think about all the different stakeholders within the SPAC universe, the SEC, as they evaluate this, whatever they do come up with will have a real big impact.